You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program here on the network where we go a little bit beyond our traditional stomping grounds. Not talking about your VIX and your Apples or your NVIDIA options here on the show. Nope, we're talking about the Bitcoin and the ETH. Going to talk about the volatility, the Skew, all that fun, and a whole bunch more. My name, of course, Mark Longo from the optionsinsider.com. as well as from the network upon which all of you folks are binging these days. Hope you're having a good start to your trading week, a rare week here in the U.S. where we have a trading holiday coming up. But guess what? It's not preempting the Crypto Rundown. No, it's actually coming on a Wednesday, which is a rare thing. So all you Crypto Rundown folks who get angry whenever the show is preempted for the holidays here in the U.S., guess what? You're good to go this week. You're safe. Only our Wednesday shows suffer this week. We're going to check out those Wednesday shows. That's, of course, Options Bootcamp, one of our most popular educational programs out there, as well as, of course, everything else we do on the network. Make sure you subscribe to the full network. Nearly a dozen shows coming at you. And, of course, if you want to go above and beyond, including great pro Q&As, got another one coming up tomorrow. We have dovetailed into the realm of crypto in those pro Q&As many times because you folks have questions about it. So from the volume, from the skew, from the trading, all sorts of fun perspectives. So if you like crypto and you're listening to this show, I think you do, then you might want to check out those pro Q&As as well as options oddities, as well as get your name in the hat for the giveaways over there. Theoptionsinsider.com/pro is the place to go to learn more as we go to learn who's joining us in the crypto hot seat this week. Here we go.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond. Going a little bit beyond today as we roll out the hot seat for a newcomer to the program and indeed to the network. He is James Butterfill, the head of research at CoinShares. James, welcome to the Crypto Rundown program.
Hi, great to be here. Thanks for having me on the show.
And James, as we are wont to do with all of our first timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the crypto markets, as well as we haven't had CoinShares on the network in the past either. So give our audience a bit of an overview of what you folks do at CoinShares as well.
Yeah, sure. So 25 years in the finance world and the last 4 working for CoinShares in the crypto world. I used to be a fund manager for the Queen, managing money, an £8 billion portfolio at a company called Coutts, which is the Queen's bank, and then ran a commodities house. And now I'm at CoinShares as head of research. Got into it because a lot of clients were asking many years ago, and I built my own mining rigs and started mining it, and just fell down that rabbit hole. And CoinShares is Europe's largest digital asset manager. We were the first, funnily enough, to create an exchange-traded product, an ETF-like product, back in 2015, at around the same time as Grayscale created their first Bitcoin fund. And we currently have around $7 billion of assets under management, but primarily in Europe, not the US.
Fund manager for the Queen. Was the Queen into crypto at the time? Did she lure you to the dark side? Did she say, hey, James, maybe you should go check out this Bitcoin thing I'm hearing so much about?
I stopped doing that job back in 2015. So back then, I'd not really looked into it all that much. So no, I'm pretty sure not.
Somehow I like the notion of the royals being knee deep into crypto. I think that would be fascinating, I think, for a lot of our audience out there. But let's get into some of the fun that's going on out there. As you mentioned, CoinShares been on the crypto asset management front for a while. You also made an interesting acquisition that I think might intrigue a lot of our listeners. It's funny, the Valkyrie Funds, the Valkyrie ETFs, they've had an interesting trajectory. They launched very much in the same timeline as the ones that really got all the headlines, which was, of course, back in the day, the BITO and all that stuff. BITO, which we talk about pretty much every week on the show, because they really got that first mover's advantage. They were out of the gate. They were approved by the CFTC, of course, based off the futures on CME. They became optionable. So for a lot of our listeners, obviously very deep in the options weeds, that was their go-to. They like trading options on it. It is a very active product as we speak. The ADV is somewhere close to 100,000 contracts a day on the options front, underlying obviously more. So it's a very active product. Valkyrie came along around that same time, and for whatever reason, I think BITO just launched first, and it really got all the oxygen in the room. I'm trying to think. I don't think we've ever discussed Valkyrie on this show before, which is interesting in and of itself. So let's start there, James. You folks acquired the Valkyrie Funds not too long ago. Why did you decide to go that route? And then give our audience a bit of an overview of what does Valkyrie offer? What are the different funds? What can they invest with them?
Yeah, so Valkyrie is probably best known for its BRRR fund, BRRR fund, so printer goes BRRR sort of thing. And that's got about $500 million of assets under management in it now, and that's a spot-based Bitcoin ETF. Prior to that, Valkyrie had launched a futures-based ETF just a couple of days after the BITO product. But really, I think, in hindsight, Valkyrie didn't perform as well, partly because it didn't have weren't available on so many platforms, and didn't have such as good a distribution effort. And I think that's what we saw. CoinShares wanted an entry point into the United States to be part of the ETF hype out there, and saw a firm where there were things that could really be improved upon. So that's why we acquired Valkyrie. And the other product is WGMI. We're going to make it. That stands for, and that is the Bitcoin Miners Fund. And there are quite a few blockchain equities funds. In fact, CoinShares owns the largest, and my team manages the largest blockchain equities fund in the world, called Block Index, or BCHN, and that's not available in the United States yet, but we're looking into that. But that has around 800 million of assets under management. But WGMI is purely miners. So if you were thinking you wanted exposure to listed mining companies then the ETF does that. And it's an active fund, so we do stock pick the best miners. And in fact, I've just come back from being with the Valkyrie guys, and we've been to see quite a few mining companies in Texas over the last week.
That must have been fascinating for you as a former miner yourself.
Yeah, James. I mean, things have changed a lot since I was doing it. And like Texas is big scale. I mean, Texas is known for, I suppose, ranching and cattle and oil, right? And not much else. But I tell you, it is rapidly being known for hosting massive data centers. And we went to some of the largest, were probably Riot Blockchain and Core Scientific. And Riot has, 400-meter long warehouse that's 50 meters wide, full of Bitcoin mining. Once the operation is, that particular site in Corsicana is fully operable, it will be consuming 1 gigawatt of electricity, helping load balance the power network in Texas. And it's seriously impressive, and there's some proper technology that's gone into that site.
So there you go, listeners. Those are the two main offerings. BRRR includes RRR, listeners, because, of course, it is focused off the Bitcoin reference rate over there at CME. Not a thing we talk about a lot, but that is, of course, a core offering of theirs over there, as well as, of course, WGMI's. James just alluded to, kind of giving you a broad sampling of the mining space. Don't you also have the BTF and the BTFX, the leveraged products as well, James?
Yeah, I actually don't know too much about those. I'm sorry. It's we've actually got quite a few products, and across the US, Asia, and Europe. So I'm not that familiar with those. Sorry, I can't be a salesman for those.
Those are the only ones that are optionable too. So those are the ones that our audience would like, even though the volume right now kind of light. You will like this, James. I know you mentioned Valkyrie kind of launching right post the BITO craze out there. And listeners, if you think it was crazy when, of course, the SEC approved the Bitcoin ETFs this past January, fast forward or rewind, I should say, a few years back to when BITO came on the scene. That was really the first game in town on the ETF side, even if it was based off the futures. And there was a lot of madness, a lot of fear around that. I tried, James. I tried to fight the good fight for you guys. I tried to talk about Valkyrie as well, and no one would have it, James. All they wanted to do was talk about BITO.
I think that the thing about any futures product and why, BITO's not really risen much above $1.5 billion of assets under management compared to, say, the iShares products and Fidelities and all the others and ARCs, is partly because it's a futures-based product. And, when you've got many institutional managers applying quite rigorous due diligence, futures products don't work that well. They don't tick as many boxes. One of the biggest problems you have with futures products, they're very easy to buy and access, but the biggest problem is what they call the roll yield. So if you're buying a futures product, typically the 1 month forward product, once that month has expired, you've got to roll into the next contract. And so you have what I would call roll yield exposure. So if it's a very bullish market, when you jump from 1 month to the next month, you will experience a bump up in price from doing that. And that's called roll yield. Now, that really works in your favor when the market's a bearish market. And in fact, you get a positive roll yield. But on the other way, when it's a bullish market like it is now, typically that doesn't work so well. And you don't have that exposure with physically backed products. And that's why the physically backed spot-based Bitcoin ETFs have been so much more popular.
Yes, that roll yield obviously contributing to the hefty dividends we see out there in BITO on a regular, some might say ridiculous dividend yield that exists on that product out there. That's a conversation we've had many times here on the show. Since we're talking about Bitcoin ETFs, really quickly, James, I want to get your thoughts on this. I just came back a few weeks ago from the big options industry conference here in the U.S. It is a gathering of, as the name implies, all of the entire options industry. And one of the hot topics down there was the lack of options, at least so far, on the Bitcoin ETFs that were approved here in the U.S. back in January. Everyone thought a couple of weeks, a month after the ETFs were approved, we'd see the options. Fast forward 6+ months now, and we have nothing. We haven't heard much. I'm curious, you spend your day-to-day out there on the Bitcoin ETF front. Any thoughts about when or perhaps if we might see these options on the Bitcoin ETFs here in the U.S., sir?
Well, it's likely. I mean, they are the most liquid instruments, so it does kind of might make sense. I think we're a little bit baffled, to be honest. It does make sense, but a lot of people are trading the options on the crypto native exchanges like Deribit and others. And the notional outstanding for Bitcoin at the moment is around $32 billion. That's a fairly well-developed market, but it is, when you compare it to, say, some equity market options, quite dysfunctional. So really, most of 90% of the liquidity is in the front month. It's very hard to secure anything outside of 6 months. And good luck with anything at a year or 2 years. It's very challenging there. And I just think it reflects what is still a relatively immature market, and it's still a developing market. And that might take many years to mature. And plus, at the moment, the ownership of Bitcoin ETFs has been very directional, i.e. buying and not really much selling. And that's not particularly conducive for a futures market. Yes, I know there's a lot of liquidity. US ETFs, Bitcoin ETFs are trading around $10 billion a week at the moment. But it's still, I don't think, enough to really kick off a really mature futures market or options market.
Well, speaking of this developing market, one of the things you folks do over there at CoinShares, when you're not talking to folks like us, is you track all these fund flows out there on the digital asset side, which is always fascinating to watch. So what was catching your eye this week as you were tracking all of the fund flows in and out this week, James? Any interesting trends you noticed?
Things in the, say, year to date have been brilliant. We've seen $16.5 billion worth of inflows. That's by far the strongest year. The last prior strongest year was 2021 at 10 billion. So this year has already broken records. But it is Bitcoin. The Bitcoin price, fundamentally at least, or theoretically, should be an interest rate sensitive asset, because it is this store of value competing with other stores of value. So when the Fed's interest rates rise, people do tend to see other stores of value like treasuries as more attractive. And when they fall, they see things like Bitcoin as more attractive. Now, this year, Bitcoin is increasingly sensitive to interest rate expectations. And last week, we saw the FOMC and we saw the dot plot coming out, and it told you that the Fed, all the regional Fed governors expect only one rate hike this year rather than two. And that, I think, has been seen as a disappointment. And as a consequence, we've seen the Bitcoin price fall. And we've also seen $500 million or $600 million of outflows over the last week. So it is definitely, if you look at intraday pricing on Bitcoin and futures market interest rate expectations, they are very closely inversely correlated. My suspicion looking forwards is that the Fed will probably be late to cutting rates, and they'll cut more than 25 bips. They'll do 50 in the first go, and that will be that's when we'll see Bitcoin really go on a tear. And until that point, until we get clarity, I do expect we'll see this kind of period of inflows and real hype. So month to date, we've seen 1.4 billion of inflows. But then these periods of disappointment when some new macro data comes out, the FOMC makes a statement, not that meaningful, but the market overreacts to it. And that's why we've seen these big outflows, really.
You mentioned correlation. That's been an interesting and contentious discussion point on this show. I know back when we first launched this show back in the early days of the futures, back in 2017, 2018, there was a lot of debate about what is Bitcoin. It has continued to this day. Some people have called it digital gold. Some people have come on the show and talked about it. Really, it's more of a high-tech allocation, and that's where it correlates the most. Some people still argue that it's non-correlated. For you and from your perspective, how do you view Bitcoin? Where do you view it lining up these days in terms of the market and where it really correlates, and maybe perhaps some surprises for where it doesn't?
Yeah, Bitcoin has had many identities over the years, and it's been difficult to empirically prove any of them. So I think we have to look fundamentally at Bitcoin is, to understand how it should behave. Now, this is a trap you could have easily fallen into if you took mid-2022 when the Fed was in full hardcore rate hiking mode. Bitcoin and equities were highly correlated. They had a 72% correlation. Now, many clients were extrapolating at that point, saying, it's just another risk asset. It's just like equities. Why do I even bother, owning equities? And at that point, I was trying to explain that this is a fundamentally different asset to equities. It is a bit like gold, but it has a growth component, and that's a key difference. And the similarities to gold is that it is a store of value. In fact, it's probably the hardest asset in the world in terms of supply. It's very well known, and you can't change it. 21 million coins in total, 93% have been mined so far. And it has a very predictable supply curve. So it is a store of value. I declare it as an emerging store of value. And then to think about how it might behave relative to other asset classes, it starts to become clear once you understand it's a store of value, it does compete with other stores of value, whether it's gold, whether it's treasuries, whether it's silver, a whole range of different things. Now, what's been interesting is we've seen massive inflows into Bitcoin, massive outflows from gold, and that suggests people are selling gold and they're buying Bitcoin. We've also, so it's had a period where it's highly correlated to gold, that's deteriorated. Its period of high correlation to equities has fallen dramatically back to within the historical norms. It currently has a 30% correlation to equities. But you have to bear this in mind that at the moment, equities and bonds have a 35% correlation to each other, which is hugely unusual. And all the empirical evidence does suggest that actually Bitcoin does diversify. It is less of a diversified than, say, it was 5 years ago, but it is a much better diversified than anything else out there, be it gold or commodities or any of those other alternative assets you might be considering, like REITs, for instance. Bitcoin empirically continues to be a much, much better diversifier than other asset classes. And I think it's wrong to say, it's just like equities, or it's like, the thing actually it has the most correlation to is its inverse correlation to the dollar. It has a minus 70% correlation to dollar. Now, that makes sense because the dollar is a store of value. When people get fearful about markets, they tend to flock to the dollar. And that tends to be to the detriment of something like Bitcoin.
That's a great point about the evolution of that correlation. It makes it such a challenging thing to come to grips with because you're right, depending on the environment, Bitcoin performs differently. Sometimes it is a high-tech allocation and it's correlated very highly to equities. Other times, not at all.
There's this natural kind of thing to try and correlate it to something else. And I think that's wrong. It is its own asset class. I wrote a paper 4 years ago called A Little Bitcoin Goes a Long Way. And I'm just about to publish a new article, an update on that. And there we were trying to help investors understand that this is a new asset class. It's a digital asset class, and it behaves differently to all the other things, all the other asset classes you can think of, really. And that's the best way to think of it.
So you would put your vote then in the, I guess, the non-correlated camp, or I guess different asset camp.
And there's plenty of empirical evidence to demonstrate that.
Interesting. Again, this has been an ongoing debate ever since we launched this show back, 2018 or so. It seemed like we thought we had settled it, and then, of course, it's everything old is new again here, James, as we have more data under our belts. Speaking of new things on the horizon, we just talked about the Bitcoin ETFs that were approved here, but of course, I know probably very exciting for you folks, very exciting, I know, for a lot of our listeners, is that we're seeing progress on the ETH ETF front as well. It seemed kind of dicey there for a little while. ETH actually selling off in the week leading into the quote-unquote approval, because people seemed like it was trending in the wrong direction. So obviously a lot of topsy-turviness going on the regulatory front. From your perspective there, James, as you're looking at the ETF front, what are your thoughts on the ETH ETFs coming soon, and what do you think we can expect on that front?
Well, we were skeptical that it would be approved in May, just because if you look at Bitcoin as an example, they lost the court case, and then actually the SEC did against Grayscale. And then from that point, in those final 3 months of last year, we saw the SEC really engage with various issuers. And we've not seen any of that this time. And I do think it was quite politically motivated with the SEC just doing an about face over the course of a week. And I think it was just a week before the approval, most people were thinking, no way, this isn't going to happen. There's no engagement. And that's why we saw that sort of negative sentiment before then. But of course, with what's different to the Bitcoin ETF is there are 3 months for these issuers to prepare their S1s and various other documents. This time around, it's been such a volte-face, sort of such a change in tune from the SEC so quickly that no one's had any time to prepare. So what we're seeing over the course of this next, well, I think it's probably early July that's been approved, is that all the issuers are scrambling to get all their paperwork in order before the launch day, which looks to be possibly the 2nd of July for some of the issuers. I do think there are some similarities in, I think many people expected huge inflows into Bitcoin ETFs, which happened, but it was dampened to a significant extent by the massive outflows from Grayscale. The Grayscale Bitcoin product at one point was on a 46% discount, and that effectively locked many investors into that closed-end product. They couldn't sell because they would have to take a massive hit on selling their holdings. So as a consequence, once it turned into an ETF, it became liquid. They can immediately sell at NAV rather than at a big discount. So all those people that felt they were locked into the product just started selling en masse. And that's why we saw those massive outflows from Grayscale. And I think the ETH closed-end product from Grayscale is similar. In terms of assets under management, less so. I think they have around $8 to $10 billion of assets under management in Ethereum. So less. But this time last year, that Ethereum product had a 16% discount to NAV. So people have been locked into that product for a long time, and they may want out on the launch of the ETF and when it's converted to an ETF. And so, yes, the new issuers will probably see inflows, but we could see a repeat Bitcoin where that is offset to some extent, at least initially so, by some significant outflows from Grayscale. And that's exactly why we saw the Bitcoin price fall after the launch of the ETF, because the only thing selling, there was much more selling than buying essentially initially, and that led to that decline in Bitcoin price. So we could see it, but fundamentally, this is a positive story of a regulator approving another crypto ETF, and I do think it fundamentally changes the landscape because it just gives so many investors that are in the confines of a regulated investment environment access to Ethereum.
Well, it should be fascinating to watch. Unfortunately, James, we have to keep on rolling with the show. But before we go, we'd like to leave our audience wanting more. We already touched on a lot of interesting things to watch, including, of course, what the heck's going on with the options on the Bitcoin ETFs and, of course, the forthcoming ETH ETFs. That said, if there's anything else you could think of, maybe some hints, some teases of what you and the team are working on, folks can look forward to coming down the pike from CoinShares. Now is the time, sir. The floor is yours.
Yeah, Wednesday, I'm publishing my second kind of edition of Bitcoin in the portfolio. And this time I'm looking at what is the optimal amount in a portfolio. I'm talking about the 64 portfolio being dead and deliver some empirical evidence to highlight that. And then I look at some big sort of all-weather portfolios like Ray Dalio's portfolio, like the Cockroach portfolio and the Yale Endowment. And I look at notionally what would have happened if they bought Bitcoin back in 2017, 2018, and how it would have improved diversification, returns, etc. So I'm looking at that, looking at real-world portfolios and how it can really enhance them. That comes out this Wednesday.
Oh, that's fascinating. We had good timing on our conversation about Bitcoin correlation. I'll have to bring you back on one of these days, James, and we can go deep into that very topic because I know it is very, very controversial for a lot of our audience out there. So I encourage you listeners, check out that report. That'll be available at CoinShares.com, James?
Yes, that's exactly it. CoinShares.com/research.
There you go, listeners. CoinShares.com/research. Give them a follow as well on Twitter. CoinShares Co. CO is their handle, all one word. James, I appreciate you taking some time out of your evening. You are there across the pond. You can now go back to your family business, sir. I look forward to reading your report, and maybe we'll chat again down the road, James.
Great to be on the show. Thank you.
All right, listeners, now it's time to keep on rolling. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, listeners, a lot of fascinating stuff. Hope you enjoyed that chat with the folks over there at CoinShares. A lot going on the ETF front right now, and we're certainly on the vanguard of it here on the show, so we'll keep you apprised on all the latest, as now it is time for us to dive into the big dog, which is Bitcoin, looking a little bit smaller, looking a little bit slighter since our last show. On our last show, we were threatening 70K, 69,876 to be precise. Coming into the start of the show today, before James and I started chatting, it was at a 67,067, so threatening to break through 67K in the wrong direction, listeners. That puts us down nearly 3,000 handles, 2,809 to be precise, since our last show. The high came pretty much during our show last week. It was quite the rampage, 69,528, so quite an active day last week. And then, of course, the low came last Friday, 65,971. So we did obviously break through that 67K handle and hanging out right about at it right now, listeners. Now let's look at the vol front. Remember, all this data coming at you courtesy of our friends over there at Amber Data, amberdata.io, the place to go to kick the tires and light the fires. Greg joins us on the show all the time with some latest updates. I encourage you to check them out on the old Twitter/X's as well. They tweet out some great research in between appearances on the show like this. Right now, the weekly vol hanging out. Again, this is for Deribit, of course. That's where we crunch all the data. That's still the big dog in town from an options liquidity perspective, listeners. 7-day vol coming in a little bit. This has kind of been a theme now. It is early summer after all. We've seen this gradual reduction in vol kind of across the crypto board. We'll see if that's continuing this week. So far, the answer is yes. Last show, we were at a 46.3 on the weekly vol, the 7-day vol. This week, again, that gradual reduction kicking in 44.7, so coming in a little over 1.5 points over the course of the past week. 30-day vol, so a more standardized vol metric, 49.25 on our show last week, 47.6 this week, so also coming in a little over 1.5, about 1.65 points on the week out there as well. So again, that gradual vol reduction kicking in yet again. Let's keep going out to the 6-month listeners. The 6-month vol, that one coming in slightly as well. 61 2/3 on the show last week, 61 even today. So pretty much treading water on the week out there. Let's go out to the Skew and see what it's telling us this week. After all, we have been whipsawing around a little bit, up to 69,000, down to around 65,000 and change, hanging out right now, 67,000, kind of right in the middle of that range. That means our Skew is kind of hanging out as well right now. Last week, it was slightly positive on the weekly front, 2.5 points bias to the upside. This week, pretty much flat, about 0.5 point bias to the upside. So the weekly Skew telling us nothing about where we might be trending in the near term. It's hanging out right in the middle of its range there. A 30-day Skew also coming in. Last week, it was 2 2/3 to the upside. This week, a positive 1, so slightly biased to the upside. But again, I would look at that as being mostly kind of flat, so not a lot of info there. Going out 6 months, it was a positive 4.1 on the show last week. Pretty close to that same level right now, positive 3.9. So longer term, we know the hodlers are going to hodl. They're going to be out there bidding up that upside, but it is coming in ever so slightly out there as well. Let's get out some of the products we were just talking about with James hanging out on the ETF front. Not a lot to talk about on the Valkyrie, like I mentioned. The only real optionable Valkyrie product is the BTF ETF. That is, of course, the actively managed ETF that does a little bit of Bitcoin and ETH. They go on the futures side. And again, that one not doing a lot of paper. The ADV is 42 contracts a day, doing 22 so far today. So not exactly lighting up the tape. Probably not going to hang out there. A BITO doing a little bit more than that, though. BITO hanging out 25.25 right now. That puts it down a little over 1, about 1.15 points on the week. The ADV, we've been talking about this for a while. That has continued to move back up. It's shot up, of course, all the madness of the ETF, has drifted down a bit over the last few months, now starting to come back up to 88,000. That's up 8,000 again. Compare that to the 42 of the Valkyrie. Not 42,000, 42 a day of the Valkyrie ETF. It shows you the different ball game we're talking about here. BITO just took up all the oxygen in the room. There really was nothing left for anything else, including the Valkyrie Funds. I did try to talk about them. Just no one wanted to hear it, listeners. The ADV for BITO right now, 88,000. Today, we're at about 69,000. So let's see, we've got about half an hour left in the session. Doesn't seem like we're going to get there unless there really is a strong surge of paper out there in BITO today. The vol coming in another 13 points. So not that gentle of a reduction in BITO vol. Down to about a 49. It was a 62 on the show last week. So BITO feeling that summer malaise from a vol perspective as well. Size positions out there, still 112,000 of the Jan 30s. That's the big dog, going to be the big dog for a while. In terms of what's trading today, it looks like 7,200 of the 25 calls expiring this week, and then 6,000 of the 25 half calls also expiring this week. Looks like paper mostly selling the 25 halves, mid-market there on the 25s. People usually buy calls in Bitcoin, but then again, the near-dated covered calls become a bit of a popular use case to get a little bit of extra juice, so they could easily be overriding these. Looks like 26 calls also trading today. 5,100 times paper selling those as well. So a lot of action on the upside. Looks like a lot of it could be overriding. Let's get out to, I know it's Greg's favorite out there, maybe favorite tongue-in-cheek. It's BitX. This is, of course, the levered 2x Bitcoin ETF. So if BITO ain't doing it for you, if it's not sexy enough, dare I say it for you, you want a 2x levered ETF, allow me to present Greg's favorite, which is BitX. I include it kind of for fun out here. It does some paper, though. It averages about 15,000 contracts. That is growing. It's up 1,000 from this time last week. So obviously, it's no BITO, but it's also not a Valkyrie fund. So it's somewhere in between, 15,000. That's respectable. Today, it's put up about 13,000, so it seems like it's going to hit it. This thing has sold off quite a bit since our last show. It's down almost 4.5 handles, 445, trading a 41.30 right now. So again, BITO selling off a little over one handle. So talking again, that's what you're getting into here with BitX. You're looking for a leveraged product. It's going to outperform in both directions. So if you're not looking for wild swings, you're looking at the wrong product. The vol still pretty frothy, a 99, even though that is down 9 points from this time last week. It was a 108. This time last week, so pretty frothy. In terms of top positions, we have, this is what we were talking about with Greg a few weeks ago, 7,101 of the Jan 2026 70 puts. Yes, nearly 30 handle in the money, year and a half out puts. Funky use case. We kind of discussed some reasons behind that on the show a few weeks ago with Greg, so if you're confused by that, check out that episode. As we keep on rolling to another product, we were talking about, of course, the actively managed miners product with James and the folks over there at CoinShares. Mara certainly playing in that game as well. And Mara, of course, won. I know a lot of you folks are interested in giving up some of the ghosts. Was at a 2040 when we kicked off the show, puts it up 0.65 at about a 2010 right now. So giving up about a third of that, only up about 0.35 since our show last week. ADV wise, kind of treading water. 281 right now. It's down about 1,000, so not a huge change out there. 254 on the tape today, so they do seem like they're maybe on pace to hit that. Again, the clock is ticking out there. The vol also coming in here as well, a 91, down 7 points. So this one was also threatening triple digits this time last week as well. Still, if you've been listening to any of our shows on the network, you know near triple digit vol is pretty hard to come by. You really have crypto and nat gas. That's really about it, unless you're talking about some of the really crazy meme stocks or biotechs. Outside of those, when we're talking asset classes, not many asset classes really can sniff a near triple digit vol these days. So that's certainly something of note out there. The big dog position in Mara right now, 37,000 of the June 30. So these are going away this week. So it'll be interesting to see what comes in to replace them, listeners. As we keep on rolling, it is time to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe. Speaking of things being replaced, let's see if anything's replacing anything in the bottom half of our top 10 from a market cap perspective. A lot of action, a lot of movement that's going on out here over the last few months, and that continues this week. Number 10 cost you $14.7 billion worth of market cap to break into the top 10 this week. That gets you to our old friend Cardano, hanging out at number 10. You might say, where's Ton? I guess we got to look for it, listeners. Where's Waldo this week? Where's Ton? It's not at number 9 either. That's Doge, $19.2 billion worth of market cap. So Doge getting kicked down from number 8 to number 9. What could kick down our old friend Doge? Well, it's maybe your new friend Toncoin, number 8. This is the weird one. They're showing them kind of neck and neck from a market cap perspective, both at about 19.1 billion worth of market cap. So if one of them inhales during the show, they'll take that spot. But that number 8/9 spot, very much fluid right now. Both Toncoin and Doge pretty much neck and neck right now. Just waiting for Musk to say something nice about Doge, and it'll be off to the races maybe for Doge. Either way, neck and neck for 8 and 9, both hanging out right around 19.1 billion worth of market cap. Number 7 is XRP, 28.6 billion. Number 6 is USD Coin, 32.4 billion. Number 5, our old pal Solana, 67.3 billion worth of market cap. Number 4, listeners, it's BNB, because of course it is. BNB, 89.7 billion worth of market cap. Number 3, it's Tether, 112.5 billion. You know what number 2 is. It's ETH, 428.8. And the big dog, again, looking a little smaller this week, 1.31 trillion for Bitcoin. Let's get out to ETH, listener. What's going on in ETH? Obviously, everyone watching these ETFs with bated breath. Do you think, as James was laying down, we might see some initial selling coming into these launches? That's what we saw in the early days of the Bitcoin futures. Of course, a lot of people compared Bitcoin back then to a bit of a roach motel. You could get in, but you couldn't get out. The Bitcoin futures gave you a vehicle to sell, and all of a sudden, bam, we saw Bitcoin hit the exit button. We saw the onset of one of the early crypto winters out there. We're going to see something similar in ETH. It's just going to be a near-dated bit of fund flow, and then longer-term hodlers are going to hodl. It'll be intriguing to watch. Right now, listeners, ETH a little bit lighter than it was this time last week. 36.90 on the show last week. 35.66 this week. So down to 124 handles on the week. The high came pretty much on the show last week, 36.90, and the low was 34.65, listeners. That came on Thursday. So we did dip below the 3,500 handle, if ever so briefly. What's going on from a vol perspective? Are we seeing that same gentle vol drift to the downside that we're seeing in Bitcoin? We have been seeing that in ETH. Is that persisting this week? Looks like right now the answer is actually kind of no. Maybe all this anticipation around the ETFs is keeping things pretty much at the same level. 7-day vol last week on the show, 57.1. This week, a whopping 57. Pretty much unched on the week. Let's go a little bit farther out. 30-day vol, 60.3 on the show last week. This week, 61.2. So we're actually ticking up about a point. That's interesting. Going out a little bit longer term, 6 months, listeners, 69.4 on the show last week. 70.25, so also ticking up about 0.85. So a little bit of an inhale, a modest one, but a little bit of a vol inhale out there on the ETH front. What do you think is driving that, listeners? It's intriguing. Let's see if the Skew can give us some more insight. Last week, the weekly Skew was biased to the upside, 2.25 points to the upside. This week, kind of flat, about half a point, similar to what we saw on the weekly Bitcoin Skew. So no joy to be found there, listeners. Let's go out a month. And again, same deal. 3.5 on the show last week. 3.4 this week, so kind of treading water there as well. And on the 6-month Skew, pretty much same deal. 6.1 on the show last week, 6.2 this week. So weekly Skew coming in, the rest of our Skew kind of treading water out there. So seems like vol remaining steady and a little bit longer term vol kind of remaining steady, or I should say Skew remaining a little steady as well. So intriguing stuff. Maybe this ETF brouhaha going to keep things juicy for a little bit out here, even though we are heading into the typically quiet summer months. Let's run through the rest of the altcoin universe and we'll get out of here for this week, listeners. Solana, 145.95 today, 161.94 last week, down almost exactly 16 handles on the week. So Solana taking a bit of a hiatus this week. XRP actually managing to tick up again, 49.9 cents last week, 51 cents this week, so up a little over about 1.5 cents. Not a lot, but for XRP holders, you'll take it. Again, XRP has been just locked to this 51 to 52 cent range pretty much forever, so not going to get too excited about that. Unfortunately, I apologize, XRP holders. Doge taking a little bit of a break as well, 14.5 cents last week, 13.2 cents. Hence that slugfest it's doing out there with Toncoin right now. Litecoin, 79.96 last week, 77.67 this week, down 2.29. Cardano, 44 cents last week, 41 cents, down a little over 3 cents on the week. Polkadot, Six double, 655 last week, 622, another double this week, so down 33 cents. And our old pal Shiba taking a break as well. 1,000,000 zeros, 2-3 on the show last week. This week it is 1,000,000 zeros and 1-9. So unfortunately, once again, listeners, no Shiba Lambos for any of us. All right, listeners, that music means we have come to the end of the crypto rundown for another week. I want to thank our guest, James Butterfill from CoinShares. Check them out, coinshares.com. If you want to learn more, give them a follow on Twitter at CoinSharesCO, all one word. And if you're intrigued by that notion of really what is Bitcoin in the modern portfolio, how does it stack up against all of the other assets we see out there? It's very much a moving target. Sounds like James' report might have some interesting data points for you to consider out there. So intriguing stuff. Check that out. coinshares.com/research, I believe he said, is where you can find that tab coming out this Wednesday. That is going to do it for us here on the show this week. Also going to do it for us on the network today. Back again tomorrow for, I believe, a pro Q&A as well as a taste of the advisor's option. Our buddy Matt does a lot of options back testing. Also likes to talk a little bit of crypto, so maybe we can squeeze some of that out of him. Tune into the advisor's option tomorrow if you want to hear that, or of course on demand wherever you get your favorite podcast. Off, of course, for the holiday here in the U.S. on Wednesday, a rare Wednesday off for no options boot camp this week. Back again on Thursday for, of course, our doubleheader of the option block and This Week in Futures options. One more doubleheader on Friday with volatility views, and of course, for all of you pro folks, coming back again for options oddities. If you want to learn more about all that fun, theoptionsinsider.com/pro is the place to go. And of course, a lot of our data today coming at you, courtesy of our friends over there at Amber Data. Check them out, amberdata.io, to kick the tires and light the fires. Amberdata.io, the place to go to learn more. And then we'll be back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.